morning, everyone. How are you, Gustavo?
Good morning, Jaime. Doing great, and you?
Looking forward to the summer, to
I
be honest.
imagine that.
We,
I
we were
imagine
talking
that.
about vacations before start hitting record, and I'm actually looking forward to my vacation, which is starting soon. So I'm not gonna lie.
Not mine yet, though. We'll get
Well,
there.
when people, I'm just thinking that when people listen to this, because we have a queue of podcasts, I might have been back from vacation, but I'm probably gonna need a new one anyway, as Antoine was saying before.
Always,
So
always.
always, Gustavo, who's our guest today?
So our guest today is Antoine Colaço. Antoine is not only a friend, but he's already also the general one of the general partners at Valor Capital, one of the leading VC managers in Latin America, bridging Latam and the US. Welcome, Antoine. Glad to have you here.
Thanks so much. Appreciate being here.
Thank you. So, Antoine, we usually start with a personal and slash professional career of our guests. So, tell us a bit about your background. Where were you born? Where did you grow up? Where did you go to school? And what did you do afterwards? And then we'll get all the way to Valor.
Sure, we're going way back then. Okay, way back in history. So I was actually born in France. I was born in Paris. My parents, my mother is French. My father was Indian. Um, Came to the U.S. when I was young, but didn't speak any English until I started going to school. So I spoke French and Spanish prior to going to school in the U.S. And then went to college in the U.S., studied mechanical and aerospace engineering. I like to joke with people that I was an actual rocket scientist, but that was only in school. I never used it afterwards. But I also did public international affairs. And my first job out of school was doing healthcare consulting. It was somewhat random, but in the U.S. at the time, there was a big change in the healthcare field. HMOs were really coming into play, and so there was a much more of a business view of how healthcare should be provided in some ways, and trying to find more efficiencies in the system.
What's an HMO?
HMO is a health management organization. So basically, it is a system that is created so that you are limited in the scope of providers that you can go to, and they try to manage the costs along with the outcomes in a more limited fashion. Whereas before, in places like Brazil, for example, it's all fee for service. These are managed care organizations that negotiate pricing and so on
Okay.
to manage price versus results in healthcare.
So, how does a
Um,
mechanical and aerospace engineer from Princeton end up working with healthcare?
I mean, who knows? I look. It was for me.
That's a good
Uh,
answer.
well, no. Well, one of the things I did learn in doing that degree at Princeton was that I knew that I was not the smartest person doing aerospace engineering, because in my year, my department was a very small department where there were only 35 or so, and the year before me, my year, and the year after, there were Rhodes Scholars in our department.
Oh,
They really knew what they were doing, and they blew out the curve every time. So I needed to figure out something else to do. And I knew that business was something that I was interested in. So that's that was my first foray into that, was consulting. Um, yeah, so I did that for several years throughout the U.S. and Canada, and then I moved to Singapore because I wanted a different experience internationally. And I worked for two local banks in Singapore, starting off by doing project finance. The unfortunate thing was I moved to Singapore, and right as I moved there, the Asian currency crisis was hitting, and so I was sitting next to the currency trading desk, and so you could see literally. I've never seen this before, but you could see the rupiah, for example, dropping by the minute, and the exchange rate was dropping by the minute. So it wasn't just like fluctuating; it was just going constantly down, 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 which meant that not a lot of lending was happening in that region. But you learned what not to do also, because what we found was that a lot of the loans had been made in dollar or euro denominated debt, and all the revenue of these businesses was in local currency. So obviously, that meant they weren't able to pay back their loans when their currency was devaluing by the minute, right? So it became a lot of debt restructuring that I learned how to do there, which was very interesting to see.
And for how long were you in Singapore?
About a year, and
Okay.
then I came back to the U.S. to go to business school.
Interesting country, isn't it? I've never been, but I've always read very interesting things about it from like an entrepreneurial, like how to build a company from the ground up and all that kind of stuff.
It's Yeah, it's a fascinating place. I mean, it's a very young country in a lot of ways, right?
Yeah.
It was created. There wasn't much there when it was created, and Lee Kuan Yew kind of had this vision, first of all, to create a place where different ethnic groups could coexist because they were not coexisting very well at the time, and created had to create something. It's not as if they had a lot of natural resources because it's such a small country, and had to create different ways of being valuable in the region, either being a port or other things that they've kind of gotten into, like biomedical sort of things and so on over time. But it's a fascinating country. There are a lot of in order to create the country, there were, what a lot of people think are some human rights
Hmm.
conditions that were created, and so that's, there are a lot of debates around that, and kind of freedom of speech and things like that, which were not allowed for a long time. But I loved living there. I thought it was a phenomenal country, fascinating place. The food is fantastic, and it's so easy to go from there to so many other places in Southeast Asia. So I enjoyed my time there very much, and made some great friends there as well. So I was there for a
Nice.
year, and then went to business school. And out of business school, I was really excited to go to this place, Silicon Valley. So I moved out to Silicon Valley at that point,
When was
in
that?
2000. So for
So
those of you that
you
remember,
jumped from one crisis to the other one.
precisely. So those of you that remember your history, remember what happened in early 2000. Everything crashed in the tech space. I actually worked the summer between my 2 years of business school. I worked at an investment bank in San Francisco called Robertson Stevens, which no longer exists. But I think I worked on 10 IPOs at the time in the matter of 2.5 months, basically, because the time was so crazy. And 2000, when I came back out here, it was the exact opposite. Everything was crashing, and I went to work for Goldman to do tech banking. Unfortunately, that meant doing more pitch decks than actually doing deals. I think I did one M&A deal throughout my time there. Um, and it was a very big change from the year before. But I learned a lot there, and then went from there to Yahoo, and worked on the doing business development for the Yahoo Finance property, and there learned a lot about business development, learned a lot about kind of the contracts needed to be done, and so on, and that, then a friend of mine from business school said, "Look, there's this opportunity at this company. It's kind of small, but you may want to talk to them." And so it turned out to be Google, and my first hiring manager was Sheryl Sandberg, who then became
Whoa.
COO of Facebook, Meta, etc.
So
And so yeah,
how big was Google at that time?
it was fewer than 1,000 people around the world, and it was still private. We still had our TGIFs where the entire company would hear how the company was doing, revenue of the company every week, etc. So it was a very small company at the time, and I
So it
think
went public in 2004, right? Something around that.
correct, yeah, and I was there in 2003. Yeah, so
Good
so I started
timing.
out a James, yeah, luckily for me, but. No, I joined to start up an analytics organization for AdWords. AdWords was fewer than 100 people, really, and it was kind of to understand, the metrics of how our advertiser base was growing throughout the world, and where we needed to, to add support, and also, at some point, kind of put together a project looking at where in the world we should open up a new operation to support our advertisers, and presented that to the founders and to Eric. And Eric turned to me and said, "Does that mean you're going to go do it?" When we proposed going to India, and when you've been at the company for less than 6 months, you don't say no to the CEO. So,
Okay.
so I ended up going to India, which being half Indian was actually something that I was excited about because I'd never worked in India, even though I'd grown up going there many times. And
Because Antoine, was AdWords an acquisition by Google, or was it
no, it was
built
built.
internally?
Yeah, it was built internally.
Oh, okay. Yeah, I'm confusing it with the other acquisition in the ad business. Okay, yeah.
Yeah.
So
And
I don't want to mess your story, but just to ask, how was Google culture at that time? I mean, working with Sheryl Sandberg, with Eric and the founders, and
honestly, it was well. So it was interesting because Google was very much of an engineering driven culture, and so it was always known, kind of the business people were kind of the the people we had to have in the company to generate some money, but the real interesting stuff was happening with the engineering team. But other than that, look, it was honestly a phenomenal culture. It was something that I don't know if I'll ever see again, in that there was always so much to be done, and we were all working very hard, but it all felt like we had a common mission, a common goal, and really didn't feel like there was huge politics at the time, right? And it was just kind of like everyone was working hard. We all felt like there was this kind of greater need for the business to grow in certain ways, and we were doing something very interesting and very exciting. And so it was a great culture. It was really, really, really fantastic in a lot of ways. And it was very, very unique. I think I was very lucky to have been there during that time.
And was it very different from Yahoo at the time?
Yeah, it was, because Yahoo at the time especially had gone through kind of its ups and downs already, and had changed from a tech company to a media company, and was more stable in that it's kind of like it wasn't growing at a super exponential pace. It was growing, it was chugging along in some ways, whereas Google was, and actually this is one of the things that Cheryl told me, and that she had been told, I think, by Eric when she joined, was you want to join a place that's a rocket ship, because you're gonna have huge opportunities to grow, and you're gonna have new opportunities all the time. And she was absolutely right. I mean, Google was growing so rapidly in so many different ways that it gave me multiple opportunities throughout my career there to try different things, to learn different things, and so that I think was very exciting in a lot of ways.
Fantastic. So then you went to
India. Talking about going back to India.
Yeah, so I moved to India to set up our operations there in Hyderabad, which was, in a lot of ways was like doing a startup in India with the financial backing and the brand of Google. But we had to convince people that we really were Google. There are a lot of cultural things you have to figure out also, where to hire, what schools to hire from. And also in that time, like in a lot of markets, whether equity was valuable to people, whether it's not valuable to people, how do you create the salary ladders, all that sort of stuff. It was a lot to do. And, we were halfway around the world from headquarters. While we were trying to, hire a team to do AdWords support and so on, I also found myself in office buildings in shells of office buildings in hard hat, telling them, where projectors should be pointed and so on, because until you have, the other functions on the ground, it's not something you can do via email. As we know, in Brazil and other countries, India is very much one of relationships. And so you have to be there with people in person. And people in here in California with the 12 and a half or 13 and a half hour time difference would send emails, but that doesn't get things done. So, we had to do a lot of other things, but it was a very rigorous, tough experience in a lot of ways. 7 days a week, working, multiple hours, even late into the night to communicate with California. But it was an incredible experience in a lot of ways, looking back on it. Very tiring, very exhausting, but very interesting.
How long were you there for in India?
About a year also.
And then back to the States again?
Back to the States. I then helped with some of our Eastern European expansion, just briefly trying to hire some people in Israel and Turkey and so on. And then was responsible for kind of opening up the Latin American operations. So first Brazil, so Sao Paulo office in 2005. And then later in 2006 was Mexico City and Buenos Aires. So learned a lot of lessons from India on what to do and what not to do. And every time it got a little bit easier, which is good. So
yeah, I was going to ask that. How different was Latin America from India in tech-wise at the time?
Well, it's funny because, we eventually, Google put Asia and Latin America was all one region for us. So it was the US, it was Europe, Japan was kind of on its own. And then we had one region, which was Asia and Latin America. We called it APLA, Asia Pacific Latin America. And part of the reason was because, for multiple reasons. One was the internet development, the stage of development in the internet was kind of similar across the regions. Japan was different, but the rest of the regions were somewhat similar. And also from an internal perspective, it made sense because if those two regions, when they were first starting out, were on their own, they would be completely dwarfed by the US and Europe, and they wouldn't get the resources or focus and things like that. So, so there were a lot of similarities as far as kind of the growth of the ecosystem and so on. There were a lot of differences, obviously. Every country is different. There's cultural differences, there legal differences, things like that. So there were a lot of differences that you had to figure out, the nuances in each one. But we did, from an operational perspective, it did get easier to open up each operation over time.
Fantastic. And Brazil became quite a big place for Google, right? I mean, it's a significant market, right?
Massive. Yeah, it's a huge market. It's surprising how big it became and how quickly it was. But if looking back on it, in some ways, it's not surprising because if you think about it, look, the Brazilian market is a market that is very open to technology. Very open to. I mean, Orkut was big in Brazil and nowhere else in the world for a long time. I think Brazil has a huge ad market, a huge online ad market. Brazilians are willing to try new technologies all the time. So, I mean, there are certain things that were very ripe for Google to do well in Brazil.
And was that the time when Google made the acquisition in Belo Horizonte?
That was prior. So I worked on that acquisition of Aquan prior to opening up the office in São Paulo.
So I don't know if you know that, Jaime, but that was a very interesting acquisition for Google. I mean, it's very, very out of the blue. Do you want to talk a little about that, Antoine?
Yeah, I mean, I think part of it was, look, I think there was this feeling that there were good technologists anywhere in the world, right? And that we shouldn't be limited to hiring people in Mountain View or Europe or so on. And so, I think the team, I think it was led by the product organization, which a lot of things were, and found a very good team in Belo with Aquan and said, look, this is a team that makes a lot of sense for us to hire, and they can do some of our development work.
What did that company do? Aquan? What did they do?
I'm trying to remember what they were doing at the time. I can't remember exactly what they were doing at the time.
So it was mostly like a talent acquisition, basically.
It was mainly a talent acquisition, exactly. Major engineering talent acquisition, exactly. But very successful. I mean, I think it was a model that then was replicated in other places to hire and acquire talent again around the world. I mean, if you look at it, there was a team in Sydney that was acquired, became our Google Maps. A lot of the Google Maps work was done down there. So it was an early acquisition, but it was kind of part of this whole idea of opening up engineering development centers throughout the world.
We were doing some research a few months ago about quantum computing, and the only quantum computer in Brazil is in the Google clock tower in Belo Horizonte. Is the only one.
Oh, is that right?
Only one. Yeah,
that's interesting. It's very interesting. Yeah, that's a whole fascinating space, but we'll see where that goes.
So established Google in Brazil, then Mexico City, and then back to the US, right?
Buenos Aires as well, and then back to the US. I then ran a reseller sales channel for AdWords throughout Asia and Latin America, which meant doing partnerships in all the markets in Asia and Latin America. So from China, Hong Kong, Taiwan, Japan, India, Korea, Argentina, Mexico, Brazil, I think Colombia, Peru, etc. So all throughout the regions that we'd have partnerships to resell AdWords with partners. And then became COO of that Asia and Latin America region. And then eventually we decided to split the regions. So Latin America became part of the Americas, and Asia became on its own and took over Japan as part of all of Asia. And I moved back out to Singapore to be COO of Asia. Spent a lot of time in Japan, kind of getting them back into the fold. And then finally came back to the US to be global head of strategy and operations for global business development.
I mean, obviously from a professional standpoint, I'm sure it is, but even from a personal standpoint, I mean, those years like traveling all around Asia and Latin America must have been pretty interesting, right, Antoine?
It was fascinating. I mean, look, I feel very international from birth in a lot of ways, and the ability to work in all these markets and work with people from all these markets, learn the nuances of all these markets was fascinating. I mean, it was an incredibly unique experience, right? And to be very young and to be able to do all those things is highly unusual as well, right? So um, it was a great experience. I learned an incredible amount through that time.
And it's also probably something that you do in your 20s and 30s, but not in your 50s. That kind of
Yeah,
traveling and all that kind of
yeah.
stuff.
Don't have the same amount of energy I did then. That's for sure. And also, when you have kids, your priorities change a little bit as far as how much time you can spend away from home.
Totally.
So let me understand one thing. So why then get out of Google, found a VC management firm, and specialize in bridging Latin America and the US?
Yeah. So when I was living in Singapore with Google, one of the people I was working with, uh, she was working on Southeast Asia, and I met her husband. And we got to know each other. We traveled together. Went to Bali for weekends and stuff like that. And many years later, he came back to me and said, we're thinking of starting this venture firm on Brazil. His father had been the U.S. ambassador to Brazil, and so they were starting this venture firm or they had started an investment firm more broadly, and then they were thinking about starting a venture business. And he knew that I had opened up Google in Brazil, spent a lot of time there, and had many years ago toyed with the idea of doing venture because I thought it sounded very interesting. So he reached out.
Were you writing angel checks at your time at Google, stuff like that?
I was not. No, I wasn't actually. No, I mean, I'd seen some startup businesses, but I wasn't really actively doing angel investing or anything like that. Probably should have been, but I wasn't. And no, so he reached. So that's my partner Scott, and he said, would love for you to join us and do this. And it took many months of conversations around whether this made sense, what the strategy was, etc. And also, you only leave Google once, or most people only leave Google once. I do know some people who have gone back, but and it was a hard decision, right? I mean, it's a great place to work. But it also, it had changed. As I mentioned, it was fewer than 1,000 people when I joined. It was over 55,000 when I left. It had been 9 years. I had done a lot of building of new businesses or starting new markets and so on. And I actually realized that I really enjoyed that. And I didn't see how many more of those opportunities there were going to be at that point. So it just, it was a little bit of a leap, to be honest with you. And I mean, ironically, looking back on it, going to Google was a leap as well. I mean, at the time, I actually made that decision pretty quickly. I think I got the offer on a Wednesday and started on Monday with Google, and was kind of like, it was not at the time, because Google was still a private company and was not as well known. It was still not, a slam dunk that it made sense to do. This was another example of kind of, it seems like it makes sense, but it's a big change. You're starting up you're essentially starting up a business to invest in startups in a market that is just emerging in some ways. Although in 2012, if you think about it, that was the time that the Cristo was kind of taking off the cover of The Economist and stuff like that. So there was some attention on Brazil, but I mean, my bet was that basically I thought venture was very interesting. I thought that the Brazilian market ecosystem was going to have to grow when you have a market of 200 plus million people and highly engaged in technology and so on. That there was going to have to be some growth in the VC and tech ecosystem, and it's great. It's better to be a bigger fish in a smaller pond. I mean, that was honestly the calculus, which was somewhat the same thing when we were looking at opening up operation in India for Google. Was why Hyderabad versus Bangalore, for example. Bangalore was the big tech hub, and we decided it was better to be the bigger fish in a smaller pond, where we could be more of a hiring magnet in Hyderabad. So same thing here. It was kind of, when you've got 1,300 VCs in the US, for example, why not go to a market where you have an opportunity to kind of create your own brand and name, and where we think that there's going to be huge growth and opportunity.
And having said all that, how was the Brazilian market in 2012 or 2013? I mean, when you
Yeah,
get here and you see the venture capital market, not exactly a booming, very competitive, a lot of startups seeking capital and so forth.
well, there were. I mean, look, there were a bunch of startups happening. I kind of think about it in certain phases. So the first phase that I saw, at least, there's a lot of kind of uh, Me Too sort of things. So like the Groupon clones of the world, et cetera, right, which were tropicalized to Brazil, but there was a lot of that. There was a lot of e-commerce, et cetera, right? So there was a lot of activity happening. It was just several years behind kind of what you saw in the U.S. or other markets, which is fine, right? I mean, we started our firm always to be a cross-border fund, which meant that we reserved a certain percentage of our capital to invest in companies outside of Brazil, which we could bring into Brazil because they may be leapfrogging what was already being built in Brazil, and then and then the majority of our capital will be locally invested. But there was a lot of activity. There was a lot of interest in Brazil. You saw a lot of foreign firms dipping their toe into Brazil and investing. There was definitely some nervousness because of, as we all know, labor laws, tax laws, et cetera. No, for foreigners, it's very hard to understand that, right? And it's very scary. So there was some dipping of toes into the market. And then soon after, obviously, we then had economic crises, we had political crises, and so on, right? The economists moved from the Cristo taking off to kind of coming flying down. But look, I mean, what we always believed was we were going to be long-term investors and had to stay in the market. And if you think about it, look, some of our earliest investments were phenomenal investments. Gympass, which Gustavo, you and I know very well, was one of our earliest investments and has been a phenomenal investment for us, right? So there was a good amount of activity and we met some phenomenal founders at the time.
Fantastic. In contrast to the US, was it like 5 or 10 years behind? Just to understand how far behind we were.
Probably close to 10.
Close to 10.
Yeah.
Is it still 10 or has it shortened?
I think it's shortened, but we still don't see, and I don't know if we will or anytime soon see kind of the deep tech that you see in the US and the kind of these crazy ideas being funded. We don't have the depth of capital right now to really fund these kind of crazy out of the box ideas, flying cars or what have you. Like I think like quantum computing, it's not going to. I don't think it will be coming out of Brazil necessarily, right? As you said, there's one quantum computing computer in there. It's with Google, right? I mean, it's not. So those things I think will not come out of Brazil or Latin America anytime soon. It's not because of lack of talent. It's just that the talent, I think, then goes to the US or Europe to work with companies here rather than there. I just don't think we have the infrastructure in Brazil, both the funding infrastructure as well as some of the other things around it to really let those things take off.
So Antoine, you started in 2012. How big was the firm at the time? So how many founders and how big was the first fund that you guys launched back then?
Well, so it was Scott and I started the fund. It was just the two of us who started the fund.
Just the two of you.
Yeah, and then we were actually investing out of proprietary capital, and then launched our first fund in 2014, our first external fund in 2014. So did a number of deals and then warehoused them into our first fund.
And in that fund, you started seeing a lot of Me Too activity in Brazil, but you also invested in some companies that were very Brazilian models, right?
Yeah, the Jabuticaba of the world. Exactly. Yeah. I mean, what was interesting is Brazil. I mean, people don't think about the size of the Brazilian market in a lot of ways. Like, it's the number 2 gym market in the world, right? Which is the reason that Gympass started in Brazil, because you have a lot of gyms. It's highly fragmented. And I think this was kind of this next phase was a lot of businesses which were using technology to increase efficiency, right? So Gympass was not a high-tech business in a lot of ways, but what it did do, it created a model that made an enormous amount of sense, combining employers, employees, and gyms in a huge market that was highly fragmented, right? And made it much more efficient and to provide that as a benefit for employees. So everybody in the ecosystem was better off as a result of what Gympass was doing, kind of sitting in the middle. And so I think that was something that we started seeing in Brazil was kind of this process innovation through technology. And so that's something I think that we did a lot of investing in early on. There was that. Freci was another example of that, where you were having huge numbers of trucks. The trucking market in Brazil is quite large. It's, I think, around 2/3 the size of the U.S. trucking market, because there's no rail, and you're not really sending anything by boat in Brazil, right? It's all through trucks. And at the time, there was a huge number of trucks that would go drop off their cargo, would go to a truck stop and look for a little piece of paper in the window to see if they could bring anything back, and 60% of the time they would go back empty, right? So there was huge inefficiencies in the market. I think that we got very lucky there that cell phone and smartphone penetration just took off at the time, so that now you had truckers with essentially the computers in their pocket, that they could start doing that over on an app. And I think Freci was very well timed to do that. So these are all examples of kind of not necessarily high tech investing, but it was
business model centered, right?
Yeah, exactly. Business model innovation, process innovation, etc., which use technology to make it much more efficient.
And I wanted to ask about one specific investment that you made in the beginning, which is Stone. Like in the beginning of the fintech revolution in the country, IPOing in the NASDAQ, very, very famous for its internal culture.
Yep. Yeah, I mean, look, so about it within a year, we hired another partner, Michael, who's based in Rio, Michael Nicholas, and he had known Andre Streich before. We got to know Andre, and he was doing both. He had his fund, and then he was obviously Stone was a big endeavor for him as well. And look, I remember I was the one that actually did the first deal memo for that deal, and we just what we were looking at this market was really two or three. It was two or three players in the credit card acquisition space, and we knew that it was kind of opening up, and there was a little bit of deregulation there, which would allow more competitors. And Stone was very well positioned, and we could see that it didn't take a lot of market share to get very high valuations, right? The value for each percent of market share was actually quite large. And so Andre obviously had built a very strong culture. The 3G guys were backing him as well, and they have obviously had very specific ways of doing business that I think he learned from as well, in a lot of ways of culture and kind of how to be very focused on business. He sent a lot of his executives to kind of, the U.S. to HBS for their executive programs and stuff like that, and learned a lot. And so I think for us we really saw a huge opportunity as things were opening up in the Brazilian market to really take what didn't need to be a huge amount of share, but could create huge market value. And so that was kind of the thesis there. And we were the only VC who invested in it, and it turned out obviously very, very well for us because it went public, and we were able to sell our shares after the IPO.
And in a sense, I mean, when we look at the Mexican market, a lot of the question marks surrounding the market are exits. And you don't have a local equities market there. Everybody's trying to IPO in the NASDAQ, and these things have to develop to effectively occur. How was the Stone IPO at the time? Because it was one of the first Brazilian tech IPOs in the NASDAQ, and it should have been like a sign of strength of the thesis for our LPs.
It was. I mean, because, honestly, look, when we first started fundraising, that was the big question. You asked it about Mexico, but that was the question in Brazil at the time, right?
Yeah, exactly. That was the question at the time, right?
Yeah, it was sounds like a great market, but are there going to be any exits? And the irony is actually there were at the time more exits in Brazil than was publicized, but because of security reasons, a lot of people didn't like to publicize, not necessarily IPOs, but M&A, right, activity that was happening. And so there was a lot more happening in the market, but it was just not publicized. So we actually had to do some research on our own to gather a lot of that information to show some of our LPs that there was actually activity happening in an M&A market. But the Stone IPO for us definitely was a validation point to say, look, there are companies that are coming out of Brazil, that will be coming out of Brazil, that are large enough and make sense to go public on the NASDAQ, on the NYSE, in the US, and we're not reliant solely on the Brazilian market because we didn't think that was going to be necessarily the real a strong outcome for companies in general if they were getting big enough. So it was a very good data point, I think, for us specifically, and then obviously we've had more since then with Nubank and so on going public.
And another one of your early investments that I wanted to ask was about Satellogic, because Satellogic, I mean, was not a Brazilian company. It was not a business model centered or distribution centered company. It was indeed a high tech company, or correct me if I'm wrong, but a product centered one in an industry where, let's face it, at the time, no one would think Latin America would produce a company like that level. And you made a very early investment into that, right?
We did. Yeah, we met Emiliano very early on. He was out here. He was actually here in Palo Alto, and had gone to Singularity University, and so we got connected because of people we knew there. Look, this was a bet on a founder who was just brilliant in some ways, right? I mean, it went back to my old aerospace days, obviously, because microsatellites and so on. So I got to dabble back in that day.
So got to connect the dots.
I went back many years later. I got to go back. If I couldn't do it, at least I could invest, right? So, but yeah, no. So I mean, it was honestly just he is absolutely brilliant. I mean, he is a brilliant founder. And I think was creating something in an industry that, look, there are a lot of use cases for, and was creating these satellites with much better resolution, imagery resolution, and so on, at a much, much, much lower price, right? And so if you believed that this data was going to be more and more important over time, and you could do it at a lower price, that was kind of the bet. And he was able to do that and was able to create kind of interesting. I think it took a little while to figure out the business model and how to get people to kind of pay for that and understand which were the use cases and so on. But I think they figured that out over time, and then obviously it went public as well.
Antoine, one thing that we always like to understand a bit better how firms work. You said that you started with Scott. Scott was based in New York, right? And you were in California, and then you hired a partner based in Rio.
Correct.
But if I'm not mistaken, I mean, these days, I mean, you're a team of like more than 40 people spread in a bunch of offices. So how do you guys operate? Tell us a bit more. How do you guys function? How do you guys make investment decisions and all that kind of stuff from a management perspective?
Yeah, look, I mean, I think we grew a lot also during COVID, which was another challenge, right? Because if you think about it, there was a lot of activity happening, especially in 2021. Our portfolio is over 100 companies across all of our funds. We've had to grow quite a bit in the last few years. The challenge, it was only last year that I met some of the people on our team in person because of COVID, right? And so it was, which is always a challenge. The bulk of our team is in São Paulo, in Brazil. We have some of our team in New York. I'm the only person out in California. So we're very much of a kind of a distributed team, which does create some challenges. I mean, we were using Zoom before everyone else was using Zoom in the pandemic, right? I think from a culture perspective, it's interesting. I think we have a philosophy of how we want to work. We're very much of a team-oriented sort of organization. We don't believe in silos. We believe that we want the best out of everyone. It will make us all better. And we, even if I'm leading a deal, if I'm the primary partner in a deal, if one of my other partners has something that can be very valuable, I will pull them in. And they do the same with me and anyone on our team who can be additive. And I think that's very important. And so this culture of being very of giving everyone opportunities, I think is something that's very important to us, right? And making sure that even if you're a junior person on the team, we want to hear your opinions and what your thoughts are, because you may have very specific insight into something that the rest of us don't. So I think that's very valuable to us. What I will say, which is interesting, was, this whole back to office kind of discussions and companies trying to force their employees going back into the office and so on. It was the opposite for us. We had gotten rid of our office in Sao Paulo when during COVID because it didn't make sense at the time, and then we were getting pressure from our team to get a new office. So it was not us forcing the team to get back together. It was the team saying to us, "We want to get back together." And I think that's a good sign because, first of all, I think the team gets along very well together, which I think is a great sign. They like being together. They like working in the same office and so on in the same space together. And I think that builds a lot of that kind of collegiality and those bonds that I think are very important. Before COVID, I was traveling probably about 6 to 8 times a year to Brazil, which I don't know how many times you come to California from Brazil, but it's not the shortest trip, and there's no direct flights. So obviously, Zoom allows us to do a lot more remotely, but I do think that being in person is very important. I was in Sao Paulo last week, for example, and I do think that there is. Look, I love the energy of our team. Like, it's a great energy. It's great to be with everybody, and I think it's really important. And I think we learn a lot from being with each other. Those conversations happen much more easily. But we are a remote team, and so we have to build those connections with each other, and then make sure that we build the right communication channels, which we don't always get right. But I think the communication channels on a one-on-one basis, on a group basis, we have a lot of calls internally for different processes. So whether it be partner calls, team calls, investment committee calls, calls with founders, et cetera, where we try to kind of make sure that we're all aligned, also pipeline calls, et cetera. So I think we're constantly trying to evolve that. And I'm actually taking on more of a COO role nowadays to really look at our processes and make sure that we can optimize that, considering how remote much of our team is.
Interesting. There's no direct flight between Sao Paulo and LA or San Francisco?
No, it's a mess. It's a mess. And you have the red eye from LA to San Francisco. It's amazing.
I'm surprised by that. Okay.
There used to be a direct flight from LA, but whenever you make a connection, it's not direct. So from San Francisco to Brazil, there's no direct flight. They have been toying with the idea ever since I started traveling to Brazil from here on a regular basis, which was in 2005. They have been tempting us with this direct flight idea, but it's never happened.
And in this process of setting up things together and doing cross-border investment, how relevant do you think it was to become a successful firm that you had people in New York, San Francisco, Sao Paulo, and Rio, boots on the ground, seeing what was happening? Because you have the pros and cons of all that, right? I mean, in a sense, when you are more distant, you can see some things from a different perspective, more relaxed. When you're closer, you can see things happening from an earlier point of view, probably.
Look, I think there were many reasons for us to be located where we were. I mean, I'm not going to lie. Some of it was personal, right? Like, I have my family here. I'm not moving everyone down to Brazil. That was not something that was in the cards. But I do think that it ended up being good because, first of all, a lot of companies from Latin America come to the Bay Area. They want to meet with investors. They want to meet other technology companies, et cetera. So I meet a lot of companies here. So that is a good thing. Additionally, it connects us with follow-on investors. So oftentimes, a lot of these follow-on investors that we bring follow-on investors to our deals as well. And a lot of those can be from the US, for example. So having a foot in New York, having a foot in the Bay Area, I think is helpful from that perspective. We also bring talent to our companies as well, right? So talent from companies here that can help, I think, is also very useful. So that cross-border aspect is very useful, I think, from multiple reasons. In addition, when we do investments cross-border, it is good to be here to be connected with them. So, for example, Coinbase was we invested early in Coinbase, which obviously went public as well, and that was one of our cross-border deals because they were very interested in the Brazilian market, and obviously our connections with the central bank and things like that were very useful for them as they thought about entering the market. But literally, we got the introduction, and they were about to close their round, and I could meet with their founders because I was living here. I met them, and within a day, and then we did the investment very quickly afterwards. So having that footprint in multiple markets does allow us that flexibility to act quickly in different areas, and I think that's important. But you're right. There's no perfect answer here, right? That creates the other issues that we were talking about, which is how do you build that culture? How do you build the connections? How do you build the communication that works when you're remote?
Yeah, we're just seeing the Sequoia split up in China and India, and the
True.
difficulty of having teams all around. So anyone structures themselves as they see fit, right?
Yeah, well, I mean,
But
I wonder yeah, and I don't know the inner workings of the Sequoia China issue also, but there's also geopolitical things there that are happening that
Hmm.
are very important as well, right? So I don't know if that was how big a factor that was, but that's a very different situation in a lot of ways, right?
But the Coinbase investment was one I wanted to ask you about, because that was like an interesting cross-border theme investment, right? I mean, you did the Coinbase investment in the US, then it became like a big crypto push for Valor within Latam, which crystallized in Bitso, in CloudWalk, and in a whole sector of the fund doing crypto in Brazil, right? It was a very, very successful way of seeing the crypto wave coming from the US and then going throughout all the rest of the world.
No, that's absolutely right. I mean, look, crypto has gone through its ups and downs as every kind of vertical does. But I think we believe that there is still a technology platform that is very interesting here. It's not we weren't in crypto or in blockchain from the perspective of speculating on different currencies. It was more the infrastructure play that we really believed was interesting. And you're right, Coinbase was the first kind of look into this. Um, and we learned a lot doing that deal, and obviously it was very successful for us. Had a phenomenal exit for us. When you can return over 100 times, we'll consider that a good exit. Um, so,
I would say it's a fairly good exit.
Yes.
I think that is, but yeah, it was our first exposure there, and then that taught us a lot about the market, and we learned a lot about the technology, what we wanted to do, and how it could play in Latin America. In some ways, it's interesting. I think the future of crypto and so on may be in markets like Brazil and not in markets like the US, frankly, because the use cases there and also the regulatory environment. If you look at the central bank in Brazil, they are much more progressive in thinking about how this can be used as a technology more broadly. And so I think that's an industry, actually, when we were talking about kind of high tech not coming out of Brazil or Latin America, there I could see things where crypto becomes more evolved in markets like Latin America, Southeast Asia, et cetera, than the US because of the regulatory environment. So it'll be interesting to see how that all plays out.
Actually, if you look at the places in the world where there's like some useful cases or interesting use cases for crypto specific and specifically for Bitcoin, I mean, it's actually Africa, which ties in very well with what you're saying about underdeveloped markets for sure.
But also, like, even if you think about markets that have huge currency concerns, like in Argentina, for example, right, where their currency the fluctuation of the currency goes so rapidly. Sometimes that's a breeding ground for places where they want a little bit more stability and ability to exchange currency or exchange money, one way or the other.
So has a crypto interest cooled off, Antoine, with a crypto winter in the past? I mean, for you guys as a firm, given the situation in the past 18 months, or not really?
I think crypto is no different than any other vertical right now for us, which is we are, we were always looking at deals. It was a much slower deployment of capital, like I think a lot of firms have been. A lot of focus on current portfolio. But I don't think crypto is any different from the perspective of, again, if you believe the general thesis. I mean, look, it's funny. Venture can go through its ups and downs. The question is how venture should be a long-term investment play, right? We are meant to be long-term investors, and themes we're supposed to be thematic as well. And so there are ups and downs in kind of how excited markets are around certain themes. But if you believe that a technology is something that's going to be a long-term play, you want to be in it for the long term. And the sub vertical within that theme may change at times, but you still want to play if you really believe that this is a technology platform that will be here for the long term, and there are a lot of efficiencies that this brings, then you want to continue playing in that. And so I think that's where we see it. But again, I think in general, we've been slower to deploy. We've been much more, we've taken our time, which has been great actually, because I think 2021 was a very, was a crazy time from a market perspective in Latin America. And I think it's nice to be able to step back and get more time to analyze deals and take your time as you're talking to founders.
So I'm gonna seize that opportunity that we ask people to refer questions to be asked to you, and one of those people asked us to see for you to opine of how different should, if it should, a VC investor behave in a bull versus in a bear market in terms of deal making, portfolio management, pipeline sourcing, and so forth.
In a perfect world, you shouldn't act any differently, frankly, because again, it's cycles, right? And we know these cycles are going to go up and down, and so in theory, you should continue to look for the best opportunities. I think what happens is in a market like this, first of all, valuations reduce clearly. I think also you have more time to do your due diligence, get to know the deals, get to know the companies, and but there should still be companies coming out at every stage that are growing, and there should be opportunities. And so you should always be looking, and always be, I think one of the things we want to be is always thesis driven and say, look, these are the industries that we find the most interesting. Now, there will be new industries that arise, be it through just evolution of a market, regulatory changes, et cetera, right? I mean, one of the reasons fintech got so big in Brazil and Latin America was deregulation that happened, right? Obviously, you had an oligopoly of banks that controlled everything for a long time. Once the government decided that we could deregulate that somewhat, that created opportunities, right? So we should always be looking for those opportunities that exist.
Are there any specific verticals you guys are looking into for the next 10 years, other than crypto, for example?
I mean, I think fintech is still something. It's obviously there's been a big wave of fintech deals, but I think there's still opportunities. There's B2B fintech that I think still has opportunities, and we're looking at sub segments that are very interesting. We are looking at climate more, so that's one area that I'm personally focused on much more for Latin America. I think Latin America is ripe for climate companies to operate in. They won't all originate in Latin America, but I do think that Brazil's just a huge market to bring climate technology to, and I think that that's one that's very interesting for us. Ag tech falls into that as well. I think there's going to be more and more in ag tech. If you look at Brazil, it's the breadbasket of the world in so many ways, like the largest soy producer in the world, right? I think there's still much more technology that can penetrate the ag market. So those are some. I mean, I think we're looking at a number of different verticals. As you know, we are a generalist firm, and so we continue to look at all verticals. But I think those are some that right now.
And in Hispanic Latam, would you say there would be specific ones for the Hispanic-speaking Latam?
I don't know that there are necessarily anything different. I think, again, Mexico, we're still seeing a lot of fintech deals in Mexico. And then, I think what you'll see is kind of interesting spin outs from big companies. So you've already seen kind of the Rappi mafia. So people coming out of Rappi and starting up their own businesses, just like you saw the PayPal mafia here in the US. I think you will see spin outs of companies, but it'll be across a number of different verticals, I think, still. I think Mexico, we're excited about Mexico. It's kind of a few years behind Brazil in a lot of ways from an ecosystem perspective, but there's new and interesting things there. Healthcare in Mexico is very interesting, very underdeveloped, huge opportunities. So I think that's something interesting. And I think you'll see pockets of things coming out of Chile, Colombia, Peru, et cetera. So I think that there's a lot of opportunities. We've got the ecosystems are growing in those markets, and I think it's really exciting.
So I bet the market is quite different these days than it was in 2012, 2014 when you guys started, Antoine. So how has the firm evolved in terms of like investment areas of focus, not sectors and industries, but check sizes? Have you tried to go up? Have you kept the same structure, the same terms? And I'm asking this because many times when we do these interviews, we see like two different approaches. So one, you stay true to what you like, to the kind of size of fund that you want, to a specific check size. Some other firms try to go up market, and all of a sudden, I mean, if you invest at seed, go Series A, Series B, go growth. What has been the case for you guys at Valor?
So we are on our fourth early stage fund. So that's still, kind of seed and Series A is kind of our sweet spot. in Latin America. For the cross-border deals, it's usually a little bit later. It could be Series B, because we want to see more product market fit and make sure that's something that we could bring to Latin America. We are on our second opportunity fund, which is a later stage investment, so kind of B plus in Latin America. So a different mandate in some ways. 50% of those follow on to our current deals, and 50% can be new deals. So we have kind of grown. We do, our funds have grown in size since the first fund, obviously, but we do feel very much that we want to make sure that the size of our funds matches the size of the opportunities in these markets, and doesn't get. We don't want them to be too large. A, because of the size of the market, but B, also it's important to be able to show returns and show venture returns on a fund from a fund perspective, and so I think that's very important as well. So that's kind of how we've grown philosophically through our different funds now. So with our sixth fund now.
So last two questions that we ask to every single guest that comes on the show. Can you recommend us a book or some other form of content? And can you also suggest us someone to invite to the podcast that hasn't been on before?
So I can't. So on the second question, I don't know everyone who's been on your podcast, but if you haven't invited Cesar from GymPass, I think he would be fantastic.
No, we haven't.
No. He's on my list.
You have to invite him. I mean, he's hard to get. He's a very busy man, but I mean, he's a very thoughtful entrepreneur who has gone through a lot of ups and downs with the business and just managed to find a way to really continue to grow. And I have a lot of respect for Cesar. So he's a person, and I know Gustavo, you've known him for many years as well, and I think he's a great person to always to listen to.
He's on the list, and he's a very good example of cross-border investment.
I mean, yeah, but at the time, when we first invested, and I know you remember this day, was he was going from B2C to B2B, right?
Yeah.
And that whole change from going from B2B to B2C, I think was I don't know if we would have invested if we hadn't done that, right? Because I think the B2C market would have been very difficult. It's highly marketing reliant. CAC is very high. The move to B2B and then creating that economic model was brilliant. So I give them all the credit in the world. And then even through COVID, they went from, if you think about a business where all of your partners shut down, how do you continue growing your business, right? And he managed to keep it flat during that time by adding digital channels and then continuing the growth afterwards. So it's very, very, I have a lot of respect for him as an entrepreneur. So I would highly recommend him. As far as, so I will be honest with you, I'm not a huge book reader per se. I actually read articles a lot. I love investing in technology and so on. I love understanding the latest trends in technology, but I'm also a person who, as you can see from my educational background, I kind of like tech, but I also like public international affairs. I think it's important for people to understand the world in general. So I highly recommend people understanding current events as well. So I read a lot of news events right now in general, in addition to kind of tech stuff. So I think I think it's very important for people to be well-rounded overall. I think people get very focused in their narrow silo and can be so focused. So my advice is to be a well-rounded person and understand what's happening in the world more broadly as well. Because, so part of the things you see, part of the things that are investable in tech are also partly based on what's happening in the world around us.
Is there a specific publication you often go to? For example, The Economist and stuff like that, or not really?
Well, I grew up in Washington, D.C., so I read the Washington Post and the New York Times also. So those are the things that I read a lot. But I have a lot of other different kinds of areas that I'll read an article from here or there. So
cool. All right, Antoine, this was great. So thanks a ton for your time.
Absolutely. Sorry I spoke for so long and so much, but it was good to talk to you guys.
Thank you. It was a pleasure.
Thanks, guys.